Tuesday on MyStockScanner Live. The week is still young and opportunities are everywhere. Let's find the good ones. Quality, upside, and timing. The 3 points in the 3-point playbook. We always post those questions to any stock we take a look at, and for good reason. The 3-point playbook sits at 4.2 point this year. Last year, we did 34.48% in return of investment. Hans-Henrik Nielsen, Liam Flavelle, these are men of answers. I'm Jesper Baehrenz, I'm the guy with the questions. Hans-Henrik, there's a movie called Silver Lining Playbook, and since we're not movie critics, we better talk about silver in general then. It had its moment yesterday in the market. Was it a correction or was it a foul play?
Oh, that was a bit of foul play, I suspect. We can't know for sure, but I'll talk about it a bit later.
Okay, Liam Flavelle from the UK, always cool, calm, and collected. But you are a little bit giddy when it comes to tech stocks. That's your specialty. That's your niche, so to say. You know a lot of things, but tech stocks really get you going. What's on the menu for today?
HYNIX, interesting one. Meta, NVIDIA. There were a lot of tech news this week, so it took me a while to write the article today for Tech Tuesday.
Okay, but I thought we were sort of in a move away from tech at the moment if we look at the industries.
I don't think many people got the memo on that one, so yeah, I think they'll still be around.
Okay, there's a lot of things moving on the markets today. Silver is back in the spotlight, but what happened yesterday? That's the big question. Was it a burp? Was it market manipulation? The big question goes for Hans-Henrik just in a minute. We're gonna ask you in the Tuesday poll, where's silver heading if we look a month out in time? Are we still talking triple digits, or is there a dip on the way? In Europe, Volkswagen is in our focus, and we break them down in our 3-point playbook as a stock. And on the macro front, India and EU strike a long-awaited trade pact, while fresh tariff threats from Donald Trump goes to South Korea. And as Liam just told, it's Tuesday Tech. HYNIX, it's a name that you need to get used to. We talk about Meta, but also about COREWEAVE and NVIDIA. And there's lots more of the program, so let's get into it. Let's get number of the day, $205 billion, what I have in my pocket. No, that's what we're talking about later in the show. Silver had a moment yesterday, for sure. Hans-Henrik is going to bring up some graphs that is going to give you pause. Hans-Henrik, what happened?
Yeah, that's a good question. We all know the overall graph about silver comes here. It has been going completely ballistic. But if this is a daily graph, meaning each of the candles is 1 day's data, let's try and look at a 15-minute graph and look at what happened yesterday. The market went crazy. It was just buying upwards like crazy, 14% up in 1 day. That equals from the point here when the day really started and to the top, about $500 billion that the silver owners got richer. Then a top analyst from JP Morgan came out saying, nah, it's way too expensive. It should only cost half. And then the market plummeted and about $1,000 billion disappeared. And when that was over, it went up $500 billion again. So $2,000 billion were moved around here. And you could ask yourself, does JP Morgan really think that silver is going down? Did they have a short position that they needed to exit? Were they short themselves, or did they have some customers that wanted to make money on this? We have no idea, but moves like this, $2,000 billion, are not just moved around by coincidence. I can promise you that.
Hans-Henrik, let me arrest you, not for accusing them of anything, but just to ask you, because the thing is that if JP Morgan are the only one who believes that silver was going to half price, wouldn't it normally be that it would take more analysts to make a move like this?
JP Morgan they're huge, and when they bring out their big gun on commodity analysis, and he comes out with something like that, it's not necessary. We often see that an analyst from one of the big houses, they can just mention one stock, move the target, and for the stock, and it moves the market. So I think there was a lot of people sitting a bit on edge, ready to sell, and then JP Morgan coming out with this. They knew what they were doing, definitely.
Okay, let's ask the smartest people that we know, and that's our users, because they're smart enough to pick us as a source of their information. But we'd like to ask you, what do you think the silver price is going to be when we come to March 1st? That's a little month in advance. Do you think it's going to go up? Do you think it's going to go down? We have a poll that we put out on Tuesdays. It's in all our Facebook groups. Go and take your vote. And first, I'll ask you two. Let me start with you, Hans-Henrik, then. What is the price of silver going to be March 1st?
130.
Okay. That was, for once, Liam, he was fast.
I know. Do you want me to be slower?
No, that's
about yeah, I weighed it up a lot. I thought about it. I'm going to go for 131.
131. Okay, so definitely higher than it sits today.
This is spoof on investment level, so
it is. But at the same time, it would be interesting if the silver went up now by 500.
I can see we are moving the market
$1
right now. It just went up 20%.
Exactly. No, let's move in another direction. Let's go in the direction of cars. And again, this time I'll arrest both of you, because I remember two guys on the show about 2 months ago, something like that, saying, never ever buy car stocks. It's going nowhere.
That was Liam.
Okay, great, Liam. What are we talking Volkswagen for then?
That's ancient history, what you're talking about. I mean, things have changed quite a lot since then. We did actually look at a car stock. We had it as a stock of the day, didn't we? About a week later. So, yeah. Car stock is an interesting one. Volkswagen went up 6% a couple of days ago. And the main reason for that we can see is the India deal with EU was being talked about then. It's being sort of, I couldn't actually say what stage it's at the moment, but it seems to be a pretty solid sort of starter for a deal there. And basically it allowed Volkswagen and all the car companies to sell off all the petrol and diesel cars that are sitting there not being sold at the moment because people are being moved to EVs into India. So it's not a bad thing for Volkswagen. If we just do a very quick 3-point playbook, you can see right at the top the 3 reasons why we're not actually in the stock at the moment. The quality score is 19 and the earnings per share is in red. It's in red even though this sort of yellow analyst bar out here for next year or for this year is quite high. It's because it's down and then it's back up again, and it's a situation we don't like. But effectively, the 3-point playbook, 3 questions. Is it a quality stock is the first one. We only want to hold quality stocks in our portfolio. When we look at the stock, as I say, the quality 19, earnings per share down then up. Might be interesting. There's no PEG ratio because it's actually down to the earnings are dropping this year, so it's a negative growth, and everything else looks quite red. So it's not something that I'd be particularly interested in. It's an interesting valuation for people that might have it in their portfolio already, or might have a different way of measuring the quality side of things. Because from our point of view, looking at historics, you can see I've sort of mapped out the red bar here, our worst case scenario, the bear case, to the drops over the last year or two into the chart. You can see in the worst case scenario, we're saying actually there's probably a 7% drop gain in here, and the worst case if we hold it until the end of the year. Best case scenario is around 40% or so, and the analysts think it's going to go up 25%. So the analysts like the stock. From a pure technical point of view, it's actually in the buy zone as well. Whereas the MTI is showing momentum, the stock is just tells us the stock is in a good strong uptrend, and it's just gone above its 50-day moving average, which is this green line here, which is, as most people know who watch us, that's one of our key areas that we look at. So yeah, we wouldn't buy it, but it's an interesting stock.
Let me then run the question by Hans-Henrik, because he's sitting there looking a little speculative. He didn't convince you about that we should go into Volkswagen, did he?
Oh, yeah, Liam? Oh, no.
He doesn't even listen to you, let alone me, obviously.
He's not that good at convincing, actually. And no, the thing is, I came to the exact same conclusion. It's there is some macro that is interesting, but not enough to persuade us to buy.
Yeah, because I was going to say now we have a big brand new deal signed between India and EU. They agreed to a trade pact. It's been 2 decades in the doing. Shouldn't that move, as Liam pointed out in the beginning, since they can sell off all their stock, basically, now we're talking stock of cars here, to India because there's no tariffs anymore?
Yes, there is the tariff thing, the 40% trade deal. To be honest, it's a big fat middle finger to Trump, telling him that we are able to trade with anyone else, basically. The thing is that EU can sell a lot of cars, and it's not only cars that Volkswagen and BMW they have in stock. It's also it's gas, it's diesel cars they can produce, and that is actually what they are best at. So if they can push 1 million cars to India, also newly produced cars, make some money on them because there's no tariff in India anymore, and then develop their EV program more. That is one of the big benefits I can see for Volkswagen and several of the others. I think this is a major step. It's a major advantage for them. Doesn't mean we'll buy it. That's where many private investors go wrong. They see a case, they see a headline, and I think, oh, I run into Volkswagen then. It's not necessarily a good investment case just because we think it's good for the company.
See, the thing was that while you were talking, then the graphics on the screen kind of moved towards a figure that has about 100% chance of clinging onto a microphone if you give him one, and that was Trump. Because the thing is that he's just been boosting South Korea's tariffs because of a threat of a Canada on China deal. Hans-Henrik, make sense of that.
What? Should I make sense of it?
Yeah,
I can't, because it's, you know what, US put on Canada because I don't know whatever trade thing, and then Canada turns around and say, all right, then we need to trade with someone else, and they pick China and they pick EU and now South Korea, and then Trump goes ballistic and say, oh, you can't play with anyone else but me, even though I'm beating you. So now I beat you even more because you play with the other guys on the playground. It's just, I'm not even sure what to call it. It's not strategy. It's just insane. So I suspect that this guy from South Korea, he'll visit Washington. Maybe he'll have a little play planned for him, or a golden bar or a peace prize from the local dart club or whatever, and then everything will be fine.
Okay, I think it's about that we make it investable, and I'm going to do that. Like, I'm going to use this South Korean angle and pose it to Liam, because one of the stocks that we've been looking at for quite a long time, and we can't really get our head around where to buy it, because you can buy it on the Korean exchange. There's also limited places in Europe. There's something in Germany, something in Luxembourg. It's pretty hard to get your hands on, but it's a good stock, isn't it?
It is a good stock. We can go through the exchange side of things in a sec, but coming back, I mean, we just looked at Volkswagen's playbook page, and it was a lot of red. Completely the opposite with these guys. In fact, I've struggled to remember the last time I saw a better one of these. You've got, as I say, to people who, regular viewers will know that I automatically look at the quality score, 99 out of 100, fantastic. The earnings per share is going up and up and up, so that's fantastic. And I look at the PEG ratio, anything below 2.5 is great. 0.15 is absolutely fantastic. So there's a lot of fantastics in here. If you look at the returns on equity, invested capital and capital employed here, we won't go into too many details of what they are, but they basically tell you how efficiently a company takes $1 of your money and puts it into and makes profits out of it. So they're going great guns at the moment for that. Price free cash flow is actually very low compared to where such a company that's had such a big run up would normally go, and the company hasn't got a problem with debt. So question one is, I mean, if you hadn't heard me before, it's fantastic. So yeah, big tick. When we come to the valuation, so the second question, the playbook is it cheap? Is it something that we'd want to invest in right now? And by this, we look at the historics of where the price is traded according to its PE band. So we had the latest values on earnings per share. We multiply that by various PE levels for my bull, my base, and my bear case, and come out with the stock price at the end of it. So it's very, very simple. This stuff isn't rocket science, and we're basically matching the lower and the upper levels with where the price has been in the past. And you can see here, our worst case scenario for the end of this year is that the stock only gives us 3% back, but the bear case, or the bull case, sorry, which is the best case scenario, 78%, and we think it's probably around 41% gain, and that's after, I don't even know what the gain is this year so far. So it's huge. So that's another big tick in the box. And from the third point of view, HYNIX is all the way up to the top. It's in an uptrend. It's great. The big news over the last day or so has been that they got a big contract with Microsoft to supply exclusively the memory to their new Maya 200 chips, of which they're making around 200,000 this year, and each chip is around $4,500 worth of memory. So it's around $1 billion worth of kits being sold to them. So SK HYNIX, fantastic company. They've got earnings. We wouldn't touch them at the moment, but our premium members will know when we do.
And one question I have for you that Hans-Henrik and I talked about in the Danish edition of the show was the PE value for SK HYNIX. For a tech company, it's very low. And that, if you move it up, could make it even more attractive.
It certainly could. I mean, if we just put it up to 20 on the bull case, which is still ridiculously cheap for the top company in the world that produces a memory that only they can do, but only 3 companies can do this. And these are the drivers of HBM4, which is the latest type of memory as well that's coming in. Then you suddenly get 187%. So if the investors really start looking at this and say, okay, yeah, we'll go and invest in South Korea, which I think is why the PE levels are so low, then yeah, there's a good chance that the PE levels will go up. I'll just touch very quickly on Meta. Similar sort of thing. I won't go through the playbook. They're a high quality company. They've dropped 15% in the last 3 months or so, basically on the fact that I tend to measure the amount of cash going into AI in bucket loads. So there are several million, 100 million bucket loads of cash going out of Meta into the AI infrastructure they're building. So it's a return on investment, which is why this has dropped. The thing to remember with these guys, they've been using AI to really laser focus their advertising ability. So people who use their platform to advertise to users are actually getting more marketing return on investment than anywhere else at the moment, it seems. So they have a phenomenal engine there to do this. They've also just announced a subscription model, which is, we saw it last night actually, it came up on my wife's phone, £4 a month. They've got 2 billion users every month. If they get 10%, 20% of that, that's 25 to 50 billion extra in revenue for doing absolutely nothing.
It's simply money in their pocket, no doubt about it. And as said, it is Tech Tuesday, which means that Liam will tell more about Meta in the article that he put out on the platform. You also have some, I won't say small news, but it is small in that sense that it seems like something we heard before. We talk about circular economics within the tech industry because NVIDIA threw money after CoreWeave.
They did. They threw 2 billion at CoreWeave for land and electricity supplies for the future. Basically, it guarantees CoreWeave that they'll have the latest chips, the first takers of the latest chips, the Vera Rubin kit that NVIDIA are coming out with now. That 2 billion then guarantees that they'll pay more than that to generate 5 gigawatts of AI compute, and NVIDIA will benefit massively out of that one.
Okay, and there's more to be found in the article that Liam published on our platform, MyStockScanner.com, and that's one of the benefits you have of being a member. And it seems like we have to jumpstart Hans-Henrik again. He's there was a quirk coming from you. Yeah, he's still there. He's still there. He's awake. But we're going to take number of the day, and I'm going to hold it to you, Hans-Henrik, because the number of the day was $205 billion, and that is the market cap of the biggest company, if you look by market cap, in India. They're called Reliance Industries. They're sort of one of these conglomerates that do everything. They do energy. They do, well, as you can see in the pictures here, they do industry, they do tech, And as said, $205 billion market cap, not too shabby. Number 2 in India, Bharti Airtel, which is a telecommunication. You can almost hear it from the name, 125 billion. And then number 3 is Tata Consultancy. Tata, a little bit of a trick play there, because if you add all their divisions together, they're probably the biggest company in India. 600,000 people are employed by Tata Consultancy. But let's go back to Reliance. Hans-Henrik, should we look to India? Now we just talked South Korea. Should we invest in India?
India is an interesting market. It is. The Indian index have been going up for a while, have stalled a bit over the last 3 to 5 months, but it is interesting, and they used to be the younger brother to China, and in many aspects they still are, but they are coming in fast. And as we talked about a while back, China have some problems with the size of the population. It's actually not as big as they want it to be. India is growing, and the Reliance Industries, if you're looking for that, look up at the NSE exchange. There are 2 down there, and this is the right one of them. Not an impressive quality score, but that is probably due to the free cash flow down here. Earnings per share going up, revenue just slightly going up. These are in Indian rupees. I don't think it's all of a sudden the largest company in the world. They are getting a bit of control on the free cash flow. That is one of the things I'm normally concerned about. If there's a negative free cash flow, you can see on price to free cash flow that you are paying an insane amount for the stock for the amount of free cash flow you get. But it's a fairly good company. The trend is good. We can see it's one of these companies that are very stable in where investors think they are cheap and expensive. So they're selling it down from the expensive levels and buying it at the cheap ones. Just looking at this, there is a reasonable case here, about 3% in a bear case and up to 43 here. We will not buy it right now. First of all, to be honest, there are so many stocks in Europe and US right now that are interesting that I would not necessarily go to India. Then I would probably pick an ETF covering India instead if I wanted that. But it has broken down through the 200-day moving average, which means it's an absolute no-go for us.
And that sense, again, it is a market, and it probably will get more into focus, especially with the trade deal also coming with the EU. But it is on our radar. We keep an eye out for it. And the same goes with ETFs. That's one of the things that we have sort of in our back pocket. And we're going to talk much more about that in the future, because we have some tools that we're going to bring out for the premium members. And we're going to look at ETFs in that sense. I know that we always say that we take your questions, and we do that. FOMO@MyStockScanner.com. It goes both for Liam and it goes for Hans-Henrik as well. And if we don't get around to your question on the show, we'll try to get to you via email or bring it up in a later show. And ETFs is one of the questions that we get quite often. But we have a super busy week. Lots of earnings coming in today. Boeing, but also UPS. We have HCA, health stock. We got GM, lots more. But tomorrow, that's when the champagne bottles are going to blow up, because Microsoft, Meta, Tesla, ASML. Liam, can you contain yourself? You look like you can.
We follow the data. So yeah, it's if it comes out well, Microsoft is particularly interesting at the moment because they've been beaten up. Meta have been beaten up, and ASML, a really important company. So any of those 3, I'd be interested in.
But I know that the 3 of us have talked about ServiceNow, probably not the most famous known stock of the lot. They also come with earnings tomorrow. But Liam, you kind of flagged them and said, they have a new deal with the American military, or what was it that could?
The US Army have just. I mean, the stock has really struggled because everyone thinks software companies like that are going to die, and Anthropic Claude and the AI routines are going to eat their lunch effectively and make coding a thing of the past. It's complete rubbish. I mean, I was using AI to help me code yesterday. It's useful. It got 3 things wrong yesterday that took me about half an hour to fix. So it's not that simple. simple, especially with a massive code base that these guys are talking about. But they did a deal with the US Army for $6 billion for the next few years. That's going to keep them in, AI provision and actually it's the logistics side of things, purchasing within the army and recruiting in the army. So the army are hoping to massively reduce down their costs there using this technology.
Hans-Henrik, I know that you also want to talk earnings, but I'm going to talk to you about the rather economic calendar instead, in that sense that we have a Fed interest rate decision tomorrow. Everybody says a foregone conclusion, but you're going to hang on to the words of your good friend Powell, ain't you?
Yeah, the interest rate in itself is not up for debate. It's 100% certain it's going to stay where it is. But yeah, Powell DOJ had a case against him that was directed by Trump. So maybe Powell has a bit of a grudge, where something he needs to just, in his very polite way, tell people to do whatever.
Run away. He's going to come out in a t-shirt saying "Screw you, Trump."
Something like
one
that,
of his last
in a diplomatic way.
Yeah, because the thing is, Hans-Henrik, he has basically 3.5 months left on the job. Does he even care anymore?
Yeah, well, remember he actually has a couple of years more in Fed, but just as a normal member. So and right now, interesting, but that is for another day. But it actually seems like we're going to get a former BlackRock head of one of the departments in BlackRock as a new Fed. That is what the odds say right now. That could be interesting. But that we'll have that as a subject for a completely other day.
See, the thing is, we're never going to run out of subjects. That's why we broadcast 5 days a week in Danish at noon and 2 days a week in English at 1 o'clock. And that means, Liam, we'll see you again on Thursday, because there's Thursday Tech, of course. And in the meantime, do look up his article on MyStockScanner.com. It's definitely worth your time. You will get information that you don't get anywhere else. So be a part of our platform. And remember, tell people about this show. It's free. So in that sense, make other people as wise as you are. It's not like we're going to steal your money, or they're going to steal your money by also watching this show. So do sign up, become a test member, and see if you like our tools that you find on air, or rather on our platform. We will be back on air tomorrow at 12 o'clock in Danish. Thursday, Liam is back at 1 o'clock in English. For now, we'll always bring you the playbook, quality, upside, and timing. This wraps up Tuesday's MyStockScanner Live. The week is on the way, and there's plenty of opportunities out there. Pick the best ones. Happy investing, guys. Take care.